Welcome to Apest Invest, where macro data meets analysis and analysis meets clarity. You are welcome. So this is Dangote Sugar Refinery full year 2025 audited results. So we are going to dive into the books in the next 5 minutes to get done. After the 2025 results, we are going to analyze the Q1 2021 so that you know how the company is faring as you add this to your decision making. Now, in the gross margin tripled to 14%. The company is coming from. Then earning before interest and tax was at 98.5 billion. The refinery is working. Below the line is a 50, but there is a 90.3 billion interest expense, and there is an FS loss of 46.7 billion which absorbed every kobo. So let's dive into the book. This is our X page first. So if you want to download these graphics, you go to our X page, Apest double underscore invest, so you can get it there. So let's look at what the income statement looks like. So this is the income statement of Dangote. So if you look at the revenue, grew to over 24.6%. The gross profit grew over 294.2%. Operating profits also grew over 300+%, because the company was coming from a very dead place. That is first thing you have to know, the storyline. We are going to feed you with that, but so that you know how things were before now. Then the net profit, which eventually became a net loss, improved. So it's a case of like the cleaner of all the dirty shirts, like getting better from a very bad place. So let's look at the numbers to get a sense of. Hold on a sec. Oh, hold on. Okay, sorry about that. We started this. So this is what the number looks like. 2024, 2025. So you see that in 2024, the revenue was 665.7 billion, but it grew to 829.2 billion. Very good. Then if you look at the gross profit also, gross profit as at 2024 was 31.1 billion, but you see how the gross profit, that's when you now deduct expenses, you see how it's tripled to 122.6 billion. So that is the growth. Then this is the operating side of the business. Then if you head down to you check that every other expenses is going up. This says general administration naturally is going up because it's an inflationary environment. If you look at depreciation, everything is looking up. Other operation and maintenance, everything is looking up. But let's look at the operating profit. When you have deducted all these expenses, see that the operating profit grew over 300 and something percent. You see that there is a significant improvement there. But look at the elephant in the room. You see this finance cost. This is where it all started. It doubled up here. Then if you look at the losses already, there are some which we explain. So one of the major losses is this FX. This FX due to, remember, they do importation and there was a devaluation. They have some dollar obligations. So this thing affected the devaluation. Floating of naira affected all the dollar exposed company in Nigeria, apart from the banks who were holding dollar at a time. So they booked FX gain. So that loss is still crippling. The loss is still crippling. So it affected them. But the effect was lesser. So that was why in 2024 they had a loss, net loss of minus 192.6 billion, but it is lesser now, but it's still there, dialing out. It's still there. So this is what the income statement looks like. Still at loss, but the loss is decelerating. Then that is why if you look at all the margins, it looks, the margins are recovering. That is why it looks, they are recovering from where they are, but they are still below the standard. Look at the gross margin. At least for businesses like this, the gross margin is not supposed to be below 15%. So it's still shying off from 15%. It is. Then if you look at the so that is the storyline. FX is dragging the business, and finance costs. FX and finance costs. So you bear that in mind as we look at the balance sheet side of things. So this is the balance sheet. Before we now give you the so this is the balance sheet side of things. So for the balance sheet now, you look up. Remember, you can get these graphics on our X page. You go there and download it and put it in your book. So you look at the assets dropped. The total assets of the business now is just 965.9 billion. It dropped by 8%. The equity dropped because you are booking loss, but then the liability went up. The liability ballooned. It not really ballooned, it went up. So accumulated loss. So it is still a loss-making business. Just that the pace of the loss before and now is not same. Then that is why if you compare 25 and 26, you just see the state of the business. The equity side of things too is still very much. So just negative. What is drawing this? FX. And also the liability that went up is the liability that is coming from some of the backing things now. So these are some of the things you need to know now. Then that is why if you look at the matrix, they are all flashing. Both the current ratio that is supposed to show the solvency level of the business is below this industrial standard. Then this you don't mind this return on assets and the return on equity, because they are still very much disrupted from the negative loss. So it's a recovering business. So it's far way better the way it is now than the way it was in 2024. But they still need to come back to profit. So these are some of the things you need to bear in mind. Number one, they sold more. That's why you see the volume went up. Over 50 kg sugar. Sugar sales helped to grow their revenue USC. Then the finance cost the finance cost is really eating up on the business. That's another thing you need to know. Then another thing you need to know is that they booked a loss of close to 66 billion because CBN of Nigeria, which is the Central Bank of Nigeria, invalidated. That is where you see there. Invalidated their roughly, if you convert 58 million US dollars, that is what will give you that 66 billion. They had a forward contract which they wanted to use to hedge, but CBN was restructuring a lot of things, so they cancelled it out. So it led to a loss, which if not, it could have been a profit. So that's one of the things that affected the book. Then they were also able to raise price of their sugar, and the pass-through effect also helped. Then another interesting thing to know is that they have their plant is in Lagos. So the Lagos plant is the one generating the profits. The revenue you saw came from majority of over 5.8% of the revenue came from Lagos. Then North did over 35. Then the West and the East are pretty tiny. Then there is another strategy they are deploying. Now they are deploying a strategy of what you call the BIP, which is backward integration. Now they have sugar plants, like where they are cultivating their sugar cane in Nasarawa State, Adamawa State, and Taraba State. But the thing is this, because all this while they have been importing in order to support the government, because the government government is driving a policy, that Nigerian National Sugar Master Plan, so that you cultivate it here and produce jobs. So currently those three BIPs, which is this backward integration program, are still running at loss. And that is why the margin over there in the north is still far way below the margins you see in Lagos, because as it stands now today, it is cheaper for them to import sugar. And remember, they are sitting very close to Apapa. The wharf there is already there. You import it, take it to the plant, do what you want to do. So it is still more economical, but it might flip in the long run. That is why if you read the investment thesis here, if the backward integration start working, there is parity, then the margins might improve. Then another thing to note is that the chairman at a time then, Alhaji Dangote, he resigned. He retired as the chair to focus on his petroleum refinery, while the MD also retired after 3 consecutive quarters of losses. So they have new management, new chairman. So we see how they were gonna stay. So when we analyze their Q1 2026, we can see if there is changes. Now, the next thing to bear in mind is that they had a lot of debts. That's why you are seeing that finance cost. Now, how were they raising those debts? They were raising it from a commercial paper of mostly 180 days. But one interesting thing is, imagine issuing close to 9 commercial paper series, and the market was absorbing it. At a point, to show you the confidence the market had in them, the rate dropped from 25% to 19%. But using such short paper adds to cost. So that is why, okay, it's a tip now is that they are doing right issue now, so that they can raise fresh equity and pop it into the business. It will be far way better for them than doing any other thing. Then their Ghana subsidiary is still loss making. It's not making money, right? So the verdict is this: the business is fundamentally strong, but it is being overwhelmed by external shock, which as a result of FX, and structural capital mismatch, which is using CPs to run the business. So maybe that is why the new management is trying to, they are offering their rights issue now. They are trying to raise close to 460 billion naira. So, and their rights issue is selling at 60 naira per share for the existing shareholders. So if they're able to raise that money, which will close out this move and put it into the business, so it will help balance up the balance sheet. So that is it about. So look out for the Q1 2026. We are gonna analyze it and see if changes have started coming in, especially from the new management standard point, and see if those BIPs over there in the north, if they have started recouping and start making money for it. So see you in the next one.